Hi, everyone, and welcome to this 34th weekly market analysis. Here is Francois Ablé. I hope that you're doing very well. We used to study and preparing all the charts, a couple of charts, or the major mainly, each Monday to for taking advantage of the opportunity that the financial market could offer us. So my name is Francois Ablé. I'm the main trainer and founder of GSTA Global Street Trader Academie. You can find me through different social media as you see first on the screen. I'm mainly on Facebook, YouTube, TradingView, and also Twitter. Right. So if you have some question, please feel free to ask me. Leave a comment. Also, if you like it and you share this program, it support me. It supports this channel. So please feel free to do that. And also, if you're interested to know more about the financial market, I kindly recommend you to come in back to me, and we will definitely set up your training. So now let's start quickly on the disclaimer, our traditional disclaimer, which is very important to know as if you're a beginner or if you just starting to do trading, you mandatory to know about this disclaimer, because we're not here to make people dream. Unfortunately, we just study and for just propose informative proposal. So very careful with your money. So please be aware to all the risk, and don't afford, don't put your money on the table if you can't afford to lose. And yeah, this is mainly what is said on this disclaimer, right? So weekly market analysis number 34 for the November. Is take the 1924, 19 now to 24. As usual, we see the USD CAD, the Forex, Dow Jones Gold, and Eurobond. So it's it's mainly the asset that we follow. You can see also others opportunity, guys, if you're interested. But I always said that it's not recommended to follow many products, because it could trap to you. You have just to take a look on just one or two max products, and then you can start with that, and then it can give you some a particular profile of this market. So that being said, you can master, you can be an expert in a kind of market, but don't take don't use to follow 7, 8 products. It's just trapped you over the most time that you follow the different market, you could be trapped. So that's why I just stuck with mainly 4 assets, which is a major asset, and you can also choose one of these and be a master of that. Okay, so this is my recommendation for that. Okay, so let's jump to the chart. We used to start with US dollar index, and of course, as I told you for the previous last week, I said don't starting to do a strategy, a bullish strategy on dollar, right? Because I told you I was very skeptical around on the macroeconomic figures that the Fed releases, as the NFP. We saw that a figures of NFP, which was 250,000 for the job creation. I was very skeptical on that, because my expectation it was around 149 to 169, something like that. And so I was very flabbergasted for these figures. And it's been like a 9th month that I'm bearish on the dollar, because I know the situation and the shape on the on the global economy of the United States. United States are they very debted, and the fact that President Trump want to do some kind of expansionary government policy, it's mean that he will put the dollar on pressure, because he need to have a dollar lower, then he can spend a lot of money if he can, because it's not also possible. Depends on the weight on the debt, right? So they very careful about that, and also to stimulate the economy, they need to spend more money. And to do this kind of to for like for applying this kind of policy again, they need to have a dollar lower. So it wasn't realistic for the Fed to to put the pressure on the stock market, and then starting like an aggressive policy to raise interest. Of course, they want to, right? So they just explain to the market what they're expecting for the next over the next meeting as the 9th December which coming. The probability to for rating to for like hiking rates interest was 74%, and now he's going down to the 65%, right? And that's why the Fed official, which is the number two, like after Jerome Powell, is Richard Clarida. So he's like the second of the on the board for the chairman Fed. He said, "Don't deny don't deny the situation and the shape of the global economy and the dollar. So you have to take account for the analysis and not to present just like just a momentum of the economy. So that is just like you know uh, 12 the expectation for the Fed for about the futures based on the growth, because they expecting that the inflation will follow the growth for the GDP. And we saw that the oil doesn't follow that, right? Oil collapsed. So oil is a kind of the compass or barometer of the market, and the all the index to follow the fact that if oil progress, the enterprise could also make money and they can spend more, right? And that being said, if the oil doesn't going further, we can see kind of a slow, overall slope of the index of the market, like a global slowing of the macroeconomic uh, indicators. So that's why we saw kind of a major brief on the US dollar index, and we break this level, which is the historic level on the 97, which is starting. Is take account since like the since 32 years, so it's a very major resistance here. We break it, and then we don't get out on the this fork that I've drawn since a couple months, probably 4 or 5 months, and we stuck around here, right? And then we didn't confirm to just to going further to test, like to break the 98 point, or probably test the 100. We reintegrated this line here, this white line. That being said, now the dollar can have some like a major brief, and probably the gold and others pair related to the dollar will be now get some a bullish momentum, right? So here is the dollar. Now for this week, just be very pay lots of attention of dollar, and as we see here, we can take you can technically observe for the is a slightly progression here, and then we can have probably a test on this support, oblique support here. And if you break it, we could have a short on the dollar until the previous low, which is like 93, and then we can starting to buy probably euro, dollar, or gold. You know, if you're on already bullish position, that would be great. And also we can short USD CAD as well, because the Canadian dollar get strengthened right now with the news on the Canada, right? So here is the dollar. Very careful with that. And as I said, since a long moment, I always be bearish on the dollar, because I know the situation on the United States. I know the shape of the economy. So don't be trapped to starting for to do a bullish strategy on US dollar. Okay. So this is all I would like to say on the dollar. Now let's go into the USD CAD. USD CAD again has the same is reacting as the same to the US dollar index, because we see now that the Canadian dollar get reinforced, because the government of the Prime Minister Justin Trudeau starting now to and accelerate with a new agreement with others Pacific and Asian country, which is we call, if I think, ATGP is a kind of agreement, transatlantic and progressive global agreement. It's now that it make like a great perspective on the Canadian dollar, so Canadian dollar can be like attractive. And right now, as long as we stay on the you know as long as you stay in this bullish channel, we'll probably in intraday buy USD CAD, but very careful, because the Canadian dollar also gets strengthened. If it gets strengthened more than the USD, which is a kind of be weak, we can have a short movement on the USD CAD. But right now, we the market just like trying to follow his own path, right? We stuck on the kind of support, and we definitely reintegrated for the monthly close. The blue area here, which is the monthly close, is the easy close for the October. So if you up on that, if you above that, we probably use the bias, the bullish bias to for buying the market, because we stay always around on the this ascending channel. But if we break it, right, if you break this area, we could have a massive movement for short until the $34.50, which is the white line here, as I call the POC, the point of control. And also we reintegrated for the monthly range, right? So in intraday, this is the weekly demand, right? So probably for all the trader will, at each time, if we close on this area here, they will probably buy the market, as we see clearly. If I zoom the screen, you've probably seen that we got a nice rebounds here, because the market starting to market open to like each Monday, no, Sunday at 6 p.m. And we see that the market get some rebounds, and then probably people will try to short around here. And I recommend to do that, right? Because as long as we have this bearish momentum on USD CAD, where we can observe that the Canadian dollar get very get strong, and the USD starting to be weak, it's probably the best time to just looking for the highest point for shorting, as we follow buy low sell high, right? And then for the to reinforce that a great your position, will be just waiting about if we break this green area here, which is like the weekly demand, and then we can starting for shorting massively until the $30 or 450, we can activating so for the Ishimoku. And you see here clearly that the Shiku, no, not the Shiku, it's the lagging span, right? The lagging span here, yeah, we call that Shiku, sorry. Yeah, so the Shiku and the lagging span, if we reintegrated this area and we recross the Kijun or probably the SSB, the top of it for the cloud, we're probably going to test like a new lower, and then probably fall off until the previous daily or weekly level. But right now, it's just like play around this support. So the SSB, which is like the second point of the cloud, is playing kind of support as you see here, and is probably the same level as the weekly demand. So people buy this level here as we confirm from here, and then as long as we stay in this ascending channel, probably in intraday we will buy the USD CAD, but just once as we reintegrated this level here, the bias will probably persisting, and then we can definitely short this movement until the $3450. Okay, so here my vision of USD CAD. So now we just see the Dow Jones. So Dow Jones here, the index was very suffering on the previous day based on the fall off, the major fall off on the index, and we can see that the index are very is a kind of neutral, right? Because we probably seen like a massive movement on the oil, and the oil was also guide to the general inflation of the market. So the Dow Jones has been kind of neutral. It could lose 400 points a day, and the next day it can recover for 250, right? So it was a very tricky for trading the index, including like the Dow Jones, the S&P, or the Nasdaq. So as usual, as I said, we have like a key level that we can follow. If we break it or buy this level, if we break it on above here, which is like also represent the supply, right? Is it represent the supply of the level here. So if we break it here, the supply, we're probably going up, right? And with as long as we stuck around here, and is it coinciding at the blue area, which is the monthly close, we probably be neutral or bearish, right? We will see like right now as the for the fundamental recap, the reason why. But this white line here as the 24,970, which is kind of a key support level there. We can be like, we can watch out that, and if it's keeping this path on the progression of the dollar Dow Jones, we probably seen like in massive sell-off to this area. But in intraday, I'll be very careful, and I also define where is there's kind of 50 or 80 range bound that you have to be very careful as long as we stay around this level, right? So here is my vision of the Dow Jones. You can stay definitely neutral, or also get ready for short the market, right, or the Dow Jones. So let's now going to see Eurobond. So Eurobond here has she draw a very nice pattern. We can see here that he's always struggled with 160 and 161, which is like a major level on the major level for the then to confirm that he could probably filling this gap or not, right? And the monthly close again represented the blue area here, which is also represent the weekly supply here. Then people can starting after that. If we fell here, then we starting to for short the market, and he's starting right now, right? Each chart here that I prepare for you, they they have been like prepared for like the yesterday, like during the night, and this pattern, this candle wasn't there when I prepared this chart, but I got some like intuition when I starting to prepare the chart, because I know that this level were very strong, and if we don't break up to going to fill this gap, as long as we, turn around this level, they will probably short the market. And that's why we probably observe. And if you also used to, works with a chart, how to say, the chart is configuration, you probably see this kind of configuration as is draw, which is a double top, right? We seen probably a first movement is falling here, and then after that is also getting into a nice retest here. We fell again, and now we going to also to test like a new top here, and then we just like stuck around, and we don't know if we probably uh, stock like be neutral and lateralize here, or we're probably going to fall off, right, and break the 159.80, which is the white line. And we have here kind of a semi neckline here, because we have the first level on the white line here, which is representing the first neckline on the previous double bottom here. And then we could have also another neckline here to uh, to break it. And we have the Italian budget this week, so it has to be very careful with that. And also the negotiation on the Brexit still continue. Even Dominic Raab, which was the secretary of the Brexit on the Great Britain, resigned. So we could have we can expecting some like a massive volatility on the markets or relative to this, both events as the Great Britain and also as the negotiation for the Italian budget. So very careful with that. But my bias on the Eurobond still has been bearish, and I recommend you also to work in this way, because we didn't going up yet on the 161, which is here. It's representing the monthly close and also the weekly surprise. So if you break it, you know what we have to deal with that. Okay. So let's now going to the to finish this program with gold. The gold again, it's always very, we have uncertainty on the gold. Gold have a premise for sure to going to be bullish, but we have like a wide area for the monthly close, which is so long time play around here. As we see here, we got have a rebound here one time, a two time, and previous we have also a like it's work a lot of this level, like between $43 to do, like 12.43 to 12.15, right? So this is wide area. Then gold play a lot. He didn't confirm that he want to take an advantage for the weakness of the dollar. He doing like a massive breakup to take some like a to pushing on the top of the previous range here is rebounds, and then we starting to going with a bullish momentum, and then he stuck right here. So just waiting about that we get a new higher, so that we going above this red area, and then we can starting to a strategy for buy a gold. I've been stopped right on the gold because I bought a goal around here in this level, and I've been stopped. I put some like I was flat, so I've been stopped somewhere here, and then I'm just looking a new lowest point to buy again gold, right? So we can expecting some another first bottom as we draw probably uh, like here we have a short movement here. We agree with that. And then he's going also to doing some like a test here. And after that, we can expecting if he go is if it's not going above on the red line here, we can have also another correction in this moment here. And then we probably the confirmation to buy gold. And then definitely as long if the dollar will be weak, then gold could take an advantage and going to see further, right? This is the basic plan that we looking for. So we have to be patient of that, and then adjust our strategy based on the shape of the dollar, right? So this is all I would like to say on the gold. Great. So now let's now go into the fundamental and technical recap to finish this program. Um, so for the fundamental recap, as I said very quickly, USD CAD in short term, 1 week depends on the expansionist government policy, which is the bearish bias. So it puts pressure on the dollar. Fed tightening policy and hawkish perspective is a kind of bullish bias because you know that on the Fed we have we have a couple of official which they bullish and other one they bearish. Right now we can see that Robert Kaplan, which is the Fed of the Dallas, and Richard Clarida, which is the second after Jerome Powell, they sounds bearish, right? So we don't know exactly what's the point of view of the others Fed. So we just take account on the the comments for the Clarida right now put dollar pressure under pressure. And on the CAD, we have a government ratifying a new trade agreement with China and others Pacific Economic Zone, which is bullish. So it gets attractive for the Canadian dollar. And the consumer price index for this week is expecting to be stable. So it's a kind of bullish bias because we got a nice movement previously on the Canadian dollar. So if it's stable, it's just like follow the trend on the rhythm of the of the inflation on Canada, right? So all of that it's putting it has been a bearish momentum years ago. So very careful as I saw you I show you to the green level that we study. As long as we stay above that, don't try to short USD CAD, please. Okay, just just be bullish because we are definitely in a technical way, kind of ascending channel. But if we reintegrate this level, then you can starting for shorting, right? So Dow Jones, it's always the same song. Oil collapse. Now the oil kind of be, is trying to can get some recover on the previous sell-off, and it puts a bearish effect on the global market. Fed inflation also perspective doesn't match with GDP pace, so on short term and midterm. So that's why the index has kind of very suffering about on this bearish bias. So it could be also a kind of way to put pressure on the Nasdaq, Dow Jones, and also S&P for this week. So very careful and pay attention to that. Another time, the U.S. 10 years bond is almost below 3%. So if we're going above if we're going above 3%, like 3.5 or 4%, it will put some pressure on index. But if we going below 3%, it could be also like kind of easing way for the market to recover, and we'll probably see the index will be accelerating on the financial market, and also it will also make a decreasing for the US dollar index. So other major index could take an advantage for that, right? So it has to be bullish bias. But all of that, it's again putting bearish momentum on the Dow Jones, right? And also the same times for the gold, as we see, a rebound also with the QE rhetoric maintained by Draghi, which is the bullish bias. And the fact that European banks as Deutsche Bank or Danske Bank could not guarantee to finance the 134 billion-dollar deficit budget. So this week will be very important for Italian as a negotiation to the to the ponderation and the calibration of the budget to the European debt will be very, very important. So very careful with that. And also now we could see kind of political appeasement on the Germany or Italian. But if we have some like uncertainty, it could affect the real bond as a bullish effect, because we don't know if the Italian will be used or be stay on the or taking account for the general budget to the budget in the European debt, right? And the comments of Draghi, Trump comment always confident, right? It's also can pushing higher the euro and taking advantage to follow mechanically when the dollar be down, the euro dollar could going up. And also after that, we can expecting some a bearish momentum on eurobond, right? So this is all the technical recap that I would like to show you. So this is my my key level and my key zone that I follow. If we touch this level, I will react, right, for this strategy, signal strategy on the USD CAD. If we break $31,600 and close above a net, I will probably buy the USD CAD. As I said, don't trying to now to anticipating, just let the market get you the right price as you decide. This is my right price as I decide for my strategy. And around that, like $31,260 or $31,720, if we stay around here, I won't doing anything and just be neutral. But if we break this particular level as I wrote here, then I will take an action, right? So you have all the price front of here. I will just finish this program right now. I thank you so much for watching this video. Please leave a comment, share to your friend and your family who are interested for trading. And also when you like it and you share this program, it support me, support the channel, and it keep me tuned to continue for give you this kind of content, right? So thank you so much for watching this video. It was François Ablé. We'll see you around for the next time. Thank you so much.